So are you looking to get funded, but you don't understand the terminology or how a prop firm actually works? This is the video for you. We're going to go in. I'm going to explain to you from zero to funded how everything works. We're going to talk about the terminology. I'm going to explain the evaluation process. And hopefully by the end of it, you feel confident enough to take your first evaluation to see if you've got what it takes to get funded. Let's jump in. So, what is a prop firm? So, first of all, a prop firm basically leverages a trader's skill by giving them access to an evaluation. And the trader leverages the prop firm's capital in order to make profits. So, basically, a retail trader would actually come into the firm, so this prop firm, and they would do something called an evaluation or a test. Now, the evaluation will go through in a little while, but it's basically a quick test just to see if you've got what it takes to actually get funded. Now, once you actually pass that and you become a funded trader, this is where you actually start making those big bucks. So, what types of prop firms are there? So, prop firms, you have the traditional kind of hedge funds and banks and things like that. These are money making desks. These are, your JP Morgans or, all of your different traditional types of banks. And often they employ traders and analysts and many things in house, and they get paid a salary and they get also bonuses and things like that. But the capital provided by the firm is normally capital of clients, or maybe it's proprietary to the actual traditional fund. But in order to actually get into those places, most of the time you actually need degrees. You need to have, you go through a job application, and it's very, very different to what we actually have today. Now, the revenue comes from these traditional prop firms or these traditional firms normally comes from the P&L changes or commissions from loans and many different things like this, okay? And it's not from challenges. Now, usually you're required to actually be present in the office. So places like New York, Chicago, London, all of those different places, there is quite a long onboarding process. So you actually have training and mentorship and things like that, depending obviously on the place. I know some banks, you have like 3-4 months of training, and once you complete that and you're successful, then you actually go on to the trading desk, or you go on to be an analyst and so on and so forth. You do need a degree. I don't know anybody that has gone into a traditional type of finance, if that's banking, investment banking, or anything like that, that hasn't got a degree. And also for the traders that are on these traditional desks, the profit splits are normally very, very low. Now, I think 30-50 is 50 is quite high for a lot of these places, but the main range is anything from 10 to 30%. Now, they do get a salary, and the salaries are normally very, very good. But obviously, you have to be, it's your life, you're always in the office, you're always there. And it's very, very different to the new style prop firms that we have of today. So bringing it on to the new age prop firms. So the new age prop firm or retail prop challenge firms, basically it's 100% remote. So 100% remote, you can trade absolutely from everywhere. No need for any type of degree. You pay for a challenge and not a job application. So very, very different from the traditional prop firms where you have to, you do a job application, you go to university and all of this stuff. We don't care. We want to see your performance, how well you can manage risk, how well you can actually make profits on the capital that we actually give you while maintaining good emotional balance and risk management. That's what we care about. Now, profit splits are very high on these types of models, normally up to about 90%. FundingRock, we offer 90%. You can even go, there's some firms that offer 80, 90, even 100. It really, really does depend. Now, the difference is there are different rules. So you do have profit targets, drawdown, and trading days. These things are to evaluate how good you are at managing a firm's capital. And everything you're doing is mostly on simulated or demo funds until you have proven you've got what it takes to actually manage the firm's funds. And then you will go out to the real market. Now, some firms focus on that instant gratification, like instant funding accounts, We don't really believe in that. And the reason why we don't believe in that is because we need to evaluate you properly. And instant funding, just giving somebody a load of money without actually seeing how they can perform, in my opinion, isn't the right way that you should evaluate people that are going to manage the firm's money. So, big important question: how do firms actually make money? Now, this is a little bit taboo, but some people that really do understand the essence of it know that it's a very, very clean, good model, and it is the best for both the trader and for the firm. So the one thing that firms make their money from is challenge fees and evaluation fees. Okay, so basically, if you take a challenge and unfortunately you don't pass, then that money that you've paid for your challenge fee actually goes into the back end of the firm, and that covers things like overheads. It covers system costs, many different things. Now, if you don't pass the challenge, doesn't mean you're a bad trader. It just maybe means that you're just not ready yet. And that's okay. It's much better than putting, I don't know, like $1,000 of your hard-earned cash into a normal retail broker and blowing all of that money. It's much better to try an evaluation account because you've got a structure and okay, this is a test where I've got 1 step and 2 step to see if I actually got what it takes. And then from there, I actually can get capital to get funded with. And you don't need to blow out all of your hard-earned cash in a normal retail broker. Now, other ways that the firms make money is volume rebates from brokers, So firms that have got lots of funded traders and put a lot of volume through clearing houses and things like that may get rebates from brokers or liquidity providers as well. Now, not everybody does this, but firms that have a lot of funded traders, this is what they would do, and it's another way for them to get money. And the third one is basically profit share from funded traders. As you're a funded trader, you make money and there's a profit split at the end. So let's say you make $10,000, you will get up to $9,000, and then the firm will get the other little bit on the top. So that is normally 3 ways that they actually make the money. Now, the next part is very important because it's the terminology of firms. Now, you're going to see this is the main terminology that funding firms use, and it's very important for you to understand that, because when you go to take a challenge, you need to understand what a step 1, a step 2 is. You need to understand what a funded account is. You need to understand what drawdown. So this is what we're going to go through now. So the terminology, so challenge and evaluation, that is basically the test phase where traders must hit a profit target within a set number of rules to get funded. Now you have step 1, and you have a step 2 structure. Multiple phase structure of the challenge normally hit one phase is 8% and the second phase is 5%. So you need to pass the first level. You go on to the verification just so we can see that it's not a fluke. And that is when you will pass and you'll hit the 5% and you become the funded trader. So you buy your evaluation, you do step 1, step 2, and then you'll get to the funded trader area. Now, the good part, once you become a funded trader, you will then go and you will have a payout. Now, a payout is just a withdrawal of your performance fee, your profits, normally up to 90%, especially with FundingRock. The more that the trader, if you get an express payout or you get up to 90%, that means out of $10,000, you will earn $9,000 and the firm will earn $1,000. Now, the profit split is just that 90-10 split. That's what we call the profit split. So you guys would get the 90%. So you as the trader would get the 90%, and then the firm will get that 10% as well. So that is what that means. Now, scaling plan, all that means is that the more that you become, the more that you trade and you trade well, the more capital we want to give to you. So let's say you start off with a 50K account, okay, and after 3 months you've made at least 15%, then we may add another $25,000 to your capital for you to get funded. And there you go. We will literally as your trading goes, you have higher highs and higher lows. This is what we'll be doing with your capital as well. Every time that you make another milestone, we will actually scale your profits, scale your account as well. So that's what you call a scaling plan. Now, scaling milestones is just how much you need to achieve in order to get that scaling. So let's say you have hit 15% within 3 months, which is very, very, very good. You will then get a 25% increase in your scaling. So just like the example I gave you earlier on. So that's a scaling milestone. Now, next, obviously, these are the most important. Profit targets, maximum drawdowns, daily drawdowns, trailing, and static. All of these are very, very important for you to know. The profit target is how much you need to make in the challenge in order to pass. Maximum drawdown is the maximum amount you're allowed to lose before you actually fail the account. So let's say you have a $10,000 account. That means you can only lose $1,000 in the account before it is actually taken away from you, okay? Because that would be 10,000 from the initial balance right now. Now, for you, in order to pass, you would only need to make a profit target of 8%, which would be $800 in the account for you to pass the first phase, so phase 1, okay? There you go, phase 1. And so on and so forth. Now, a daily drawdown, this is a little bit different because this is how much you can lose on the day. So the maximum drawdown, as I pointed out, you can only lose that as a whole in the account, but a daily drawdown is how much you can lose on the day. So let's say if we've got the example again with the $10,000 account, you can only lose a maximum of $500 on the day. If you lose $500, that means you will have terminated the account and you would have lost the account, basically, okay? So it's very important to understand those levels, and you do have a trader dashboard where you can see them in live time. But when you first come into your trading desk, you really need to understand what your daily drawdown is and what your max drawdown is as well. Now, something in the industry is important for you to understand is something called a trailing drawdown. Now, that means the more that you make in the account, so let's say that is your equity, the more that you make in your account, this drawdown level actually increases. This maximum drawdown will actually be called a trailing drawdown. And that means instead of it being 10% from your initial balance, it means this will actually move up the more that you make money. So let's say if you've made 10,200, then it will be 5,000, it will be 500 from the, it'll be 10% from the 10,200. Okay. So you need to keep an eye on that, just because the more that you make money, the tighter the risk has to become. Okay. Now, we don't do that at FundingRock. The reason being is traders need a little bit of breathing room. They need to be less stressed, especially when they're trading. And that's why we have something called a static drawdown. Static drawdown just means that that's your, let's say this bar is your initial balance and this is $10,000. So this will be 10%. This will never move. Okay. Now with a drawdown, with a trailing drawdown, this 10%, the more that you make money, making money, the more that you're making money, this drawdown level will move up. Now, in FundingRock, that doesn't happen. Your drawdown level of 10% is always going to stay here. So let's say that you're making money. Okay, so this is your equity, and then you come down, and then you do this, and this is totally fine. As long as you don't come down and hit your drawdown level, which is down here, and lose all the money in the account, then you are totally fine. Okay, so that is what we call a static level, and that means that this level does not move. Okay, it's always 10% from your initial balance of $10,000. Okay, I hope that makes sense. Now, a breach. Now, what is a breach? A breach just means that unfortunately you have you haven't stayed within the risk parameters, meaning you have breached your drawdown level. So again, you have your $10,000. You have your $10,000. It's the initial balance is here. So you got your $10,000 and your drawdown level is down there and you're just losing money and you actually hit it. That means that if your balance goes down to $9,000, which is 10,000, which is 10% of your initial balance, that means you have then breached your account. Okay. So that's what that means. Now, the most important thing is just understanding what the evaluation process actually is. So first of all, you purchase a challenge account. Now, you choose an account depending on the size, depending on the confidence you have with your trading edge. You'll pick an account of either 10, 50, or even $100,000. Now, once you pass, this is actually refunded back to you. Okay. Now, phase one is the evaluation, and this is the initial evaluation where your goal is to prove that you can hit a profit target with staying in the risk rule limit. So your drawdown, your static drawdown, and your maximum drawdowns. The target would be 80% of your initial balance. And then once you pass that, you would go on to the verification stage. Now, once you're on the verification stage, this will be a second test with a lower profit target. So you will have a profit target now of 5%. So on a $10,000 account, that means you only need $500, and then you have passed on to that funded stage. Now, this is just designed to confirm your consistency, just so we understand that it's not a fluke and you actually have the true ability. And this is my favorite part because this is where you get funded. Once you get funded and you've passed both phases, you will receive a funded account, also simulated, but profit sharing starts, meaning that if you are a brand new trader, we still want to see a little bit of consistency. But in this phase, you will actually get a performance bonus. You will get paid on all of the money that you have developed in the account. If you build up a track record and we can positively profile you, we will then take you out to the market and you will be trading on live funds. For you, it doesn't really matter because you will still get a performance bonus on the simulated funds and the live funds. It doesn't really matter. But for us, we need just a little bit of consistency before we actually take that full bet on you. Now, a trader has live conditions. You will have a payout structure of 80 or 90%, and you can have bi-weekly or monthly withdrawals. So that is basically it. I hope you now have a brief understanding of how the model works, some of the most important terminology, and now you feel ready that you can go down and you can go into one of the evaluations. Start with a small evaluation if you're new, just so you can get used to the platform and just so you can understand all the rules. And then once you've built your confidence and you feel you're ready, take one of the bigger accounts, because the bigger accounts is that when you start seeing the big money, you start making bigger profits, and then you start growing with the firm. Now, if you need anything, you can come into the community. You can speak to me in support. There are so many people in the same boat as you that have got funded or are in the process of getting funded. So it is a great place to start if you're a new trader and you're looking to develop in this as a career or just looking for some side income. So best of luck, and we'll see you soon.